Thursday, October 10th. It is Tesla Day. It is Tesla Day, and we're going to go over a bunch of stuff. Robotaxi, we're going to go deep into Tesla. I'm going to do charts. I'm going to do fundamentals. I'm going to go Elon issues. Is he helping or hurting the stock? And expectations. What can we anticipate from this event today? Is it going to move the stock? We'll go into that. We'll go over CPI, how inflation is still around. Jobless claims came out. I sold a stock yesterday, 50% of my position. Why? We'll go over that. An alpha pick, EAT, Brinker International. Leveraged ETFs. They're coming fast and furious. And yes, there is a new SMCI long and strategy and a micro strategy long 2 times daily leveraged. America, fuck yeah. And do financials fit in your portfolio? You better have them. Earnings from Delta and Domino's, and a little education piece and a little story, and then some of the social requests. So we're going to go into it all. First, Dow and S&P closed at all-time highs. Okay? You're going to get a bunch of people coming out here, and if we go to all, this is Qs. We're not at all-time highs at Qs. Qs are lagging behind. If we go to SPY and we look at that, this is a time that you want to take stock of what's in your portfolio. Do you have high flyers? Is your portfolio now 80% Palantir? Because Palantir's valuation might be a little bit extended. Don't let somebody talk you out of a stock. We're going to go into that in the education world about, hey, you'll hear a bunch of people tell you things. Do not let people talk you out of investments or into investments. Do your own research. If you believed in Tesla in 2018, I didn't. I didn't think Elon was going to turn around. My $65,000 car, I should have bought $65,000 worth of stock. And today, I think even today it would be worth about $680,000. So don't let people talk you out of it. But at all-time highs, you want to take a look at those valuations. You want to beat the market. If you're afraid of the valuation of like Apple, we'll just take Apple because this is my top pick, and it's 60% of my portfolio. And you can see at 228, there has been a significant amount of resistance all the way since June at this level. It will turn into support at some point. But I am worried with earnings coming up on October 31st that maybe the iPhone isn't selling as big as they say. Maybe they don't give huge guidance on MacBook sales. Maybe it's just that, Apple Intelligence is delayed again. Maybe the iPhone 16, when they started to implement the small language model on the phone, maybe it's not doing so well. Yes, I worry about that. Yes, I've been trimming every time it gets over this line. 1, 2, 3 shares. I have tens of thousands of shares of Apple. So do not worry. 1 or 2 is not affecting my portfolio, but the psyche of getting it up there is what I want to do. So am I buying here at 229 because it's in the scan today? It's in our scans because I just scanned on the 4-hour. Am I buying here? No, because this is resistance. Again, you have to understand the fundamentals and the technicals of these charts. So when you look at SPY, I would urge most everybody to have a good amount of your beginner portfolio, because we're all at all-time highs. Have a good amount of your portfolio in SPY, in VOO, in VUG, in QQQ or QQQM, whichever one you want. I would urge you to be in ETFs like that because they are safer. And when we're at all-time highs, it's a little bit scary to buy anything. If you're going to buy something, buy those types of vehicles because they will continue higher. It's not like it's forever, but again, we're in a bull market. You're in a bull market until you're not. So let's talk about the people who have 100% win rate. And it's like this guy, Art Vandelay. Okay, if you don't know who Art Vandelay is, he was an architect who became a marine biologist. And he famously said, it's not a lie if you believe it. And many of these people who are saying, I told you about Palantir, I told you about this, I told you about that, it's not a lie because they believe it. Yes, they told you about this stuff, but it doesn't make them a guru. A bull market will make anybody look good. It's not, and it's not about even looking good during a bear market. It's about nobody knows what's going to happen in the market. So you've got to take most of the information in. And that's where I'm just, I don't want overflow of information. So I don't want to do a ton of research. I want to know the basics of the stock. And that's where the tools that I have come in. That's where Trendspider comes in with all of these charts. And yes, all I did with these, this is 565. That's the all-time high. Where did we pull back to the last few days? 565. Well, guess what? That previous July all-time high, which was a resistance level in August, just turned into support. So if you're buying here at 577 in the pre-market, 575 in the pre-market, you're buying knowing that if you're trading SPY, your support level is 565. Now, if you're trading zero-day options, I'm not going to go into the pennies. I'm just going to give you the general. But again, it's a previous all-time high that clearly showed resistance and pulled back the first part of last week, October 2nd, October 3rd, and then this week, October 4th. It pulled back to 565. So that should be your new first level of support. Your MACD, you're kind of just above the oscillator, 2 points above the oscillator. The July high where we were at, all-time high, it was 6 points above the oscillator. Your RSI was at 60. Today, your RSI is at 64. You're a little bit overbought. Am I expecting a pullback? Probably. Again, we'll go over some of the financial data because the S&P and the Dow both hit record highs yesterday. The majority, the Fed notes yesterday showed that the majority of the Fed board recommended a 50 basis point cut, but they were ambivalent. And that's the key. They were ambivalent, but they supported it. So the question is, if we still have inflation, will they go through with a 25-point cut? Because if we still have inflation, they have to go with a 50-point cut. And today's number, with inflation still high, CPI rose more than expected, 2.4 versus expected of 2.3. The previous was 2.5. So we're still on our way down. That's CPI. Okay? There's a lot of stuff in this market with murkiness because initial jobless claims jumped more than expected in the past week. Remember, we've had two major hurricanes that are going on. We had a port strike. So there's a lot of questions about these numbers. Is it one-time events? Is it going on? There's a lot of data in here. Again, remember, that's why you have the technicals at all-time high. When you want to look at the fundamentals of a stock, if you want the Trendspider stuff and you want my 4-hour algorithm, which we'll go over, it's on the link tree. The link tree is down below. Okay, Trendspider, you get to this page on the price, it's $53 a month. But it gives you so many tools where you're able to take emotion out of the market. You're able to take this murkiness of the data and you're able to look at charts and you're able to see, hey, that's an all-time high. I may want to, just be a little bit wary of this and see right here where the algorithm gets you in at 557. Let's back test that. Over the last 2 years in SPY, if I lost my sleep and I said, I'm not sure if I want to be in right now. Well, the algorithm makes you 41%. Buying and holding makes you 54%. Okay? Your win rate is 57%. So you're winning most of the time on these trades. But you're still, your average win is only 4.7. Your average loss is 1.9. So it's getting you in, but it's also getting you out a little bit early. Might be better to just buy and hold. But if you can't sleep at night, you're still making 41%. Glass half full, glass half empty. And that's where the algorithm comes into play. And you can test it with any stock that you want. If you get Trendspider, you can back test it, any ETF. You can do crypto. You could even put, Nancy Pelosi. They have all of the government buys in here. They have unusual options in here. They have everything that you need is in Trendspider. Okay? That's the first tool that I have. Then as we go on and we start looking, you're going to see the quant rating that I use, which is the fundamentals. And since we're at all-time highs, I would urge you to get this bundle. Okay, this includes Seeking Alpha Premium, and it includes Alpha Picks. Seeking Alpha Premium, if you buy it individually, it's $30 off, and Alpha Picks, if you buy it individually, it's $50 off. This bundle saves you $159. $159. So if you want the individual, again, different choices for different people. What does premium get you? It gets you the ability to do the research with the quant rating and everything that you see in Seeking Alpha without ads. Okay. What does Alpha Picks get you? It's to get you a curated, data-driven portfolio of stocks to buy and hold long term. They alert you when to sell. There's 2 stock picks, one on the 1st, one on the 15th. Okay? You look at this. They just updated the actual performance. The performance calculated through October 6th. It's 145% for Alpha Picks. During that same time period, the S&P is up 51%. 3 times, almost 3 times what the S&P has done. That's phenomenal. So again, I would urge you to get the bundle, save the $159. But if you want the individual, everything is here on the link tree. linktr.ee/daily stock pick. The first one is Trendspider. The second one's the bundle. The third one's the Seeking Alpha Premium. Fourth one's Alpha Picks. And then if you don't have charts, if you don't want anything, just deposit and do your sports betting in Webull, because we do a lot better on stocks than we do on sports betting. That's what I did. You can get free stocks if you use that link on Linktree. Okay, so there's SPY. There's everything like that. If you're into sports betting and you want to do sports betting, I thought this was great. Steve Kress picked stock picks like fantasy football. And he likens picking stocks to fantasy football. And he gives you 5 stocks. Okay, I'm not going to go over them. You're going to have to go to the article to see them. But it is like picking a fantasy football team. You want your quarterback. You want your running back. You want your receivers. You want your offensive line. You want your defense. That's what stock picking is. You want all of that put into a great portfolio. Okay, and Steve goes over it really well here. And I really like that one. So let's start looking at Tesla, okay? The Robotaxi event, Tesla is expected to announce robovans, autonomous trucks, and the next-gen humanoid robot. This, in my mind, from what I hear, it does take Tesla out of just the car game. And I think that's where you're transforming Tesla away from just a car and more to a tech company. They have the largest AI facility down in Texas. They're doing full self-driving has come a long way. It's still not great. I have it in my car. I still don't use it. I trust it on the highway. Every time a new update comes out, it F's up. And I can't trust it even on the highway. So there are definitely issues with it. Now, as far as the stock goes, we're going to look at the chart first, okay? I'm going to come back here and look at the fundamentals. But let's look at the chart first, because I want to show you where Tesla has been good, okay? We're going to look at a monthly chart first, because I want to go back to when I first started noticing this one. And it was the beginning of 2018 when I first started this, okay? Split adjusted, the stock was at about $20. Now, I bought my car. I put in the deposit on my car January 2018. I was looking at Nissan Leaf or a Tesla, and I didn't know about EVs whatsoever. But Nissan Leaf, I could literally lease here in Georgia for free, because of the state incentive and the federal incentive. So I could lease it for 3 years for free. It was going to cost me nothing. Now, I didn't want a second car, and I did need a gas car because I did need to go longer distances. So the thought was, when the Model 3 came out, that I could kind of combine the both, because the range was going to be 300 miles, so it was going to be better than the Nissan Leaf, which had a 120-mile range, which was great for a daily car, but I didn't really need a daily car. I just wanted something where I didn't have to. I remember there were several times when I went to the gas station, and this was big in Atlanta. I don't know if it's big still, but there were people that were hanging out at the gas station, and they would ask you to fill up their car with gas, and they would have their kids with them and blah, blah, blah. But then they would sell the gas, and it was just this whole kind of cringy kind of thing, and I just didn't like it. But I always felt guilty, and I would always fill up their tank with gas, and it would always cost me. And I'd get, I just didn't want to go to a gas station. Let's put it that way. So I put down my thing. Now, at $20, did I buy the stock? No. I said it's overvalued. I didn't like it. September, I took delivery of my Model 3. I freaking loved that car. Stock is trading at about $17. Okay, $17. The company's about to go bankrupt. I didn't believe in it. Traded in and out of this multiple times. Didn't believe in holding it. And I said, hey, they're going bankrupt. By June of 2019, almost 1 year, it had gone from 17 down to 14. Okay, not a huge move, but enough that probably with that turmoil, without the confirmation, it made me a little bit nervous. I was like, I just don't know if Elon's actually going to make this work, but I freaking love my car. By October 2019, you were trading at $20. Your low was $14.95 during that month, but you saw, again, huge volatility. By January 2020, the stock hit $64. So this was the start of the parabolic move. Did I trust it? No. They talked me out of it because the valuation was crazy. Then you had COVID. The low here, $23.37. It pulled all the way back to where it was trading before 2020, back in December. And so, a little bit nervous, got in a little bit. Then I think this is when he did his 420 joke, where he's taking the company private or something on 420. And I bought in, and the stock crashed. And then I got out of it. Once he did that, I got out. And I decided, you know what? I'm going to hold XLY. Wrong mistake, big mistake. $56. It went all the way up to $414. Okay, split adjusted. Now, what has happened since then? You've seen it kind of do the same thing. It's just come down. And so the valuation of this company, again, this was built on growth. So the growth quarter over quarter, year over year, you can see the volume just pump up and then just die down. Now, the volume pumped up here in 2023, so we got that nice move at the beginning. Volume has been coming down. So that's a monthly chart with a story. Now, if you bring it in a little bit and you go to the weekly chart, we're trading right at the 200-day. I don't care what it was doing in the past. I don't care about a lot of this stuff. What I care about is what it's doing today. And I know from past that Elon has talked a great game about these events. And has it always pushed the stock? No, because there's usually a lot of fluff around his talk. So what I see in this chart is I see us coming up on this $260 resistance level. You're at 240 right now, 239. So I see us coming up. I see the 50-day moving positive. I see you having confirmation above that 9-day. But I think that resistance level at 260, buying at 240 doesn't make me think, oh my God, this is amazing. I don't think they're coming out with financials and with guidance today. And if they do, kudos. And if they have some type of viable product or licensing agreement with other manufacturers that comes out today, you can buy this once that 260 turns into support. I just don't think that the risk reward is there. You are getting close to a golden cross, okay? The 50-day is down here at 209. It's coming up. Okay, if they continue to hold above 209, you will have a golden cross at some point. Okay, let's bring it into a daily and let's look at where we are on the daily. Look, 260, 260. That's just this year. You pull it back on a daily and you go back here, 2023. You had 2 or 3 times where it hit that 260. You wanted to trade it around this 260. You wanted to sell it at that 260 and just buy it anywhere underneath that 260. Now, if buying at 240 and knowing that 260 is your top, if you're comfortable doing that, have at it. But the MACD crossing down, the RSI in no man's land at 50, you got their earnings coming up October 23rd, so in a couple of weeks. And this event, I don't know that it's a buy the news event. I think you're going to see a lot like Elon. It's going to be a sell the news event. And it's going to be a bunch of people who bring it back down to 200. Again, Art Vandelay says, if it's not a lie if you believe it. But it's just a guess. And again, anybody telling you anything otherwise is just either lying or they're just making their best guess. So let's go look at some of the fundamentals. And you can read that article that I put on there. I'll put it in the newsletter for you. But let's see about the fundamentals, okay? There are 5 fundamentals within the quant rating with Seeking Alpha. The valuation, F. Growth, C minus. Profitability, A plus. Momentum, C plus. Revisions, okay? Valuation goes into things like PE. And so what PE is, it tells you, okay, if I buy one share of this stock, how much of the future earnings am I paying for? What if they just sat at today's earnings or today's guidance? How much am I paying? Well, if they sat at today's earnings with no growth, you're paying 103 times. Okay? That means you're paying 103 times earnings. That's too expensive. The average S&P is about 17. Okay? PE going forward, you're paying 105. Okay? From this one, that is one of the only things that you want to look at other than the gap. Or I'm sorry, the PEG ratio. So the PEG ratio is down here. The PEG ratio trailing 12 months is 63. Again, you know, Warren Buffett won't buy it, or I think it's Peter Lynch, one of those guys, won't buy a stock that's over 2. You want to find a lower PEG ratio because that factors in your price per earnings and your growth. Now, if we look at that's the trailing 12 months. If you say, well, their growth is in the future, we can look at that too. The PEG going forward is 8.48. Again, you want it under 2. That's why the valuation of Tesla is an F. But if you go to growth, and again, growth is the big thing. You look at revenue year over year, they're up 1.37%. That's not a huge growth company. But then you take a look at their future growth, and they're expected to grow 12.71%. Okay? That's a big one. Now, their levered free cash flow, they don't have any. He's taking all the money, and the car business is a huge capital business. So they need full self-driving because that's the software part of the business that has 97% profit margin. And when you go to profitability, that's what you're seeing, okay? Gross profit margin, it's a D because it's 17%. But again, they're in the consumer discretionary group. The sector is at 37%. So that's why it's a D. Now, their levered cash flow, they're not making levered cash flow. Again, they're putting all of their money back into the business. It's a huge capital business. But that gross profit margin, full self-driving, because it's software, is at a 90% or better. That's where you're banking on this turning from a car company to a software company. And the software isn't that, the robots are great. The robots have been easy. It's the software portion of the robots that they're looking at. So when you're looking at that, that's how you look at the profitability. Then you go and you look at the momentum. And this has nothing other than the price of the stock. And ultimately, the price of the stock is the only thing that matters. Now, 3-month performance, you're down 8%. That's a D plus. In my book, that's an F because the freaking market is up, the sector's up 5%. 6-month performance, you're up 36%. The sector's down 3%. So you get an A. Now, momentum on 9 months, 2.5%. Over 9 months, if you're making 2.5%, the S&P's up like 30% over that point. 1 year, you're down 7%. Again, the S&P's up like 35%. So again, it's underperforming. That's where momentum comes in. Now, when you look at the fifth factor of the quant, it is based on revisions from analysts. And there's plenty of analysts that cover this. And when you look at their revisions, okay, 3 of them took their earnings per share up. 29 took them down. And this is just the last 90 days. So it's not like, this is forever. But 25 took their revenue up. 17 took their revenue down. Again, the company is in this business that just costs a lot. So the earnings per share may go down, but the revenue may go up. So that's how you take a look at the fundamentals. The fundamentals on this stock would tell you, stay the hell away from it. Now, Wall Street has a price target of $208 on this one. Yes, it's come down as the stock has traded down. It's come down. You can see the high up here was $335, and then the stock came down. So there are, 48 analysts that cover this. 14 have a strong buy. 17 have a hold. And that's where you get the hold rating. So you can see how they took it up. Now, this is the analyst rating history. You can see 3.25. This is just the quant rating history. Recommendations, you can see all of that. So from a chart standpoint, we identified 260 as the top. We also identified the fundamentals as not being great. Now let's talk about Elon issues, okay? I will tell you, when pictures like this come out, it's not good. And Elon has, I don't condemn him for his political aspirations, where he wants to go. The guy was screwed over by the Democrats, so I don't blame him for freaking siding with Republicans. But he's turned off people. And that's the issue that I have. When you look at this stock price and you see it from even a 4-hour standpoint, when you look at this, it hasn't gone well. And so I think he's turned more people off. And they're looking at the valuation of the stock. And so, he's screwed either way. Because with the Republicans getting into office, if they get into office, they're going to take away the $7,500 incentive for EVs. And if the Democrats get into office, they continue to condemn Elon. So it's a no-win situation. And so good management plays a part in this. And yes, I'm an Elon fan. The man is a freaking genius. But do I believe that his political aspirations in saving America hurts the stock? Yes. Yeah, I just wish he would stop. I just wish he would stop. So does him weighing on in politics affect the stock? Absolutely. Even if you look at the polls out there that say, hey, would you buy a Tesla with Elon? When it's Democrats, there are some people that say no. When it's Republicans, there are some people that say yes, just because of that. But it doesn't weigh out. You just want to play the middle of the road. And that's why you don't see a lot of CEOs. When Trump came out and said Jamie Dimon just backed me, JP Morgan couldn't print it fast enough. No, we didn't say that. He didn't say that. They couldn't print it fast enough. They want to stay the middle of the road. There's no benefit in taking a stance. Again, I think CEOs have a great understanding of this. But I think Elon was pushed to the point where he had to make a choice. And I don't blame him, but I just wish he would have stayed a little bit quieter about it. And I think people can say what they want. But from a shareholder standpoint, that's where I would say, because to be honest with you, I could care less about politics. And that's actually one of the social questions. So stay up for my things. Now, expectations on this event. We can look at the expectations on the event from that kind of news story that I said. They're expecting, autonomous trucks, autonomous, humanoid robots. They're expecting a lot. I think it will come down to, does he give any kind of realistic terms? Meaning, do we have some price targets on the robot? Do we have some dates when we can actually see some of these robotaxis? Or is it just, hey, we're going to get there, and this is how we're going to get there? Because those types of events where he says, we're going to get there, but we don't know how we're going to get there. Look at the Cybertruck. Took 9 years. So if it's more Elon empty promises, I think you're going to see the stock sell off. If it's actual facts, fundamentals, and timelines, I think you'll see the stock stay at around the price, maybe trade up to that 260. But I think that 260 price point is really waiting for, are the earnings turning around? Is demand coming back? And are they going to continue to beat margins? That's going to be the issue. Because right now they've been having to cut prices. And I know they're cutting some staff. So they're actually running leaner. But there's a lot of top people that have left. And good companies with good management, with good products and good profit, that's what you want to be invested in. So I would rather see you wait till this gets 260 as a support level than to see you buy at 240 and have 260 as the cap. If that's okay with you, okay. But I would rather see you wait for it to see if we're going back to 200 or if we're going to start using 260, because the event isn't something that I'm necessarily worth trading. Now, if you look at the 4-hour algorithm, and I tout this a lot, the 4-hour algorithm over 2 years makes you 149.3%. Okay, on 23 positions. So it's not even once a month that you're trading this. You can see it got you in here at 220. It just got you out with a 10% gain. I would have argued you sell up here at 260. Screw the algorithm. We didn't provide support on that. We lost it. So sell at 255. We lost support. You can always get back in. I think the stock's a trade. Okay? Now, Jim Cramer, this is your warning.
Meetings ever, and that's
Kramer says it's a new Tesla, and you should buy it before the event. Watch this clip. And if we've learned anything on the number 2 rule about never listening to Jim Cramer, it's that inverse always wins. So there's how you trade the event on Tesla today. I don't think you do. Or if you're holding, just continue to hold. But I would argue that algorithm at 149% gain, you know what? If you bought 2 years ago and you're just holding, you're down 2.6%. That's an enormous gap. The 4-hour algorithm works. So if you're sitting there holding for this one to pump today, good luck. I hope it does for your sake. Because I'm not in this one. I'm playing XLY as my Tesla play. Now, VRT. We talked about support resistance. VRT, I sold at 109 yesterday. Why? Look at that resistance at 109. You're at 105 today. Okay? How did I get that 109? Well, we just go back and we look. Where was the all-time high? It was back here in May. Okay? Guess what? It was 109. If we just pull it back a little bit, you'll see. Let's pull the curtain on the secret here. We're going to remove this because we don't care about this segment. That's where I said it was going back to. And that's where I started buying. My average purchase price about 93, I think. But I sold half my position at 109. It's at 105. I can always get back in. This is exactly like what I'm talking about with Tesla. VRT has a great run going on. The algorithm makes you 433% over 2 years. Okay, that's great. Buying and holding this one makes you 837%. But valuation matters. And when you get to this valuation, when you look at this, Wall Street says it's a strong buy. Their price target, 108. I sold at 109. Okay, we're there. We're there. You look at the valuation. Remember, Tesla's trading at 119 or 120 future earnings. This one's trading at 42. The sector's trading at 20. There's other companies that are better for this one. And in looking at it, POWL, which is an alpha pick. You guys we had a question about this one yesterday. Does it have more room to run? If we look at Wall Street, there's 2 analysts that cover it. They say 194. I would argue the valuation isn't as stretched as it could be because the growth is there. The growth, look at the PEG ratio. Okay, the PEG ratio going forward, 1.97. It's under 2. So why did I sell? Valuation. So speaking of valuation, Costco. They reported a 9% increase in September net sales. That is the month that they actually raised the rate of membership. That's huge. 9%. This is a consumer destination. Am I buying at 903? Let's go and take a look at the fundamentals. The valuation, it's 50 times future earnings. No. Their growth, their PEG ratio, their growth, they're 5% year over year. When you look at valuation and you look at their PEG ratio, it's 5.39. I don't want to get into it. This stock could continue to go up. Again, if you're a Costco member, you know how great it is to actually shop there. It is a great place to go. And their sales, their traffic is up 9% in a month where they actually raised the rates. Now, the algorithm gets you in here at 892. The algorithm makes you 46%. Do I trust that one? That trend line right there is providing short-term support. So as long as you set your stop losses along that trend line, you can make money at that 892. Okay? But at 901, am I getting into it? No. I just don't feel like it. Again, you're at all-time highs. There's places to make money, but it's not at these high flyers. When you're at all-time highs, you want to buy the beaten down names. You want to buy the names that just haven't kept up. Chili's. Turnaround drives upgrade to Brinker International. We talked about Powell being an alpha pick. This is an alpha pick as well. Okay, remember I said at the beginning, there's a bundle. There's a Seeking Alpha Premium for you to look at these individual stocks. And then there's alpha picks. And the reason you get alpha picks in the bundle is because of that portfolio. That portfolio returns 145% over the same time period. The S&P only returns 51%. And they tell you when to buy. They tell you when to buy. They tell you when to sell. 2 times. That's it. And in fact, the most recently, they added to a name that was already a high flyer. And they said, you know what? We're doubling down on this one. So it's a great portfolio, and EAT is one of theirs. I don't know if I put the actual, let me see, because sometimes I'll put, okay, Alpha Picks picked this one here. Let's see if this chart has it. But let's look at EAT, because the fundamentals on EAT, what is it? Well, the quad says it's a strong buy. Okay, why does it say a strong buy? Probably momentum. We can look at this one. It's been a strong buy since 75. You're at 83. That's pretty good. Back here, it was a 75 at 37. The scores were great down here. It was great. Wall Street says it's a hold. Wall Street has a $69 price target on it, 19 analysts. And if we just look at EAT here, I think this is where Alpha Picks picked it, April. So you're looking at 57%. We're going to update this one. Let's look at this. Let's pull this up here. You're looking at 62% since then. 62%. This is where they recommended it, and it immediately dropped. It went from 50 down to 45. Was Alpha Picks hurt? No. They just stayed in it. But again, you've got to be in it to win it. Got to be in it to win it. So EAT was an Alpha Pick. I think that one's interesting with the upgrade. Now, I wrote to Trendspider yesterday because in Trendspider, I've got a list of leveraged ETFs. And we talked about China ETFs with yin and yang and the funny interaction on the compound thing where they say, damn right, there's a leveraged ETF. Damn right, there's a leveraged ETF for freaking everything. Just go to Google. If you have a stock that you want to find a leveraged ETF, just go to Google and Google it. Because this is a set of new ones that Brandon pointed out to me. There is a 1.75 MicroStrategy, and if that's not good enough, there's a 1.5 short MicroStrategy. And you want uranium? 2 times long uranium. And the high flyer, SMCI, there's a 2 times long SMCI. You want Lilly because we're in a GLP-1 market? LLYX, that's 2 times long daily. Okay, there's a lot of them. And if you're in a Trendspider and you're a Trendspider subscriber, you should have my leveraged ETFs to trade. I am keeping up that list. Anything that you want me to put in that list, I will put in that list. But there is a list of leveraged ETFs that you can scan on with the 65-minute algorithm, with the 4-hour algorithm, with the 5-minute algorithm. You can scan on all of those to find entries. Okay, it's super easy to do. Now, from Trendspider, do you have financials in your portfolio? Financials are setting up beautifully ahead of major earnings on Friday. Today's Thursday. We have JP Morgan, we have Wells Fargo, and we have BlackRock tomorrow. These 3 stocks make up 15% of the entire XLF. Also worth noting, usually rally into the end of the year during election years with an 84% win rate and an average return of 3.93%. It's huge. That's huge. Let's look at XLF, because if this is setting up for a nice year-end run, you want to be in financials. Pick your financials. I'm in Bank of America, Wells Fargo. I had some Citi, but I think I got out of Citi, and I want Schwab as well. Those are the financials that I off the top of my head, I like. In the core portfolio, we have Goldman Sachs. In the core portfolio, I think that's the only we have Bank of America in the core portfolio as well. I think those are the 2 big financials that I have in there. But there's QQ, there's some in QQQ. There's financials all over those ETFs like VOO and stuff like that. But XLF got you in at 45.63. Now, the algorithm makes you 48% over 2 years. Buying and holding makes you 46%. So you're really just looking for entries. 45.63, you're trading at 45.71 right now. So the MACD, super low. It's right on the oscillator. The RSI, a little bit overbought at 60. Nothing crazy. You go and look at the weekly because these things have been running. The MACD's up there. MACD is up there. The RSI, overbought, 66. But it's coming off of March 25th where it had 83. The high on this one was 44.66. So do we have more room to go? Probably. We probably have a little bit more room to go because these things haven't kept up with the rest of the market. But I like that thought. I like it. Okay, now we're going to talk about earnings because today Delta Airlines released. Delta missed by 2 cents. They said there was a 3-cent charge in relation to Hurricane Helene, but this stock trades regularly. We're going to go look at the chart. It trades regularly between 40 and 50. Airlines, it is clear. Airlines are not a buy and hold. Airlines are absolutely a trade. This was the earnings period where the CrowdStrike outage happened. Okay. Any reaction is an overreaction. Right now you're down 2%. It looks like 2.42%. I think you can trade this airline. And look, the algorithm had you in at 39%, at $39. $39. That's a great return. That's August 9th. That is a great return. It had you in throughout this down period, but I would argue that you didn't have confirmation. Okay? This trades regularly between $40 and $50. You're losing support here. You've got some gap down here to about 48 or so. I wouldn't buy this today. I would wait a few days. This is a 4-hour chart. The MACD is a little bit high. It's not crazy. The RSI is at 53 coming down. I would wait till that RSI gets under 50. And if you want to trade an airline, trade it. Don't buy it and don't hold it. It's clear. This is a trade, not a buy. Okay? Domino's Pizza. It slipped after missing Q3 estimates. It was up. Now it's down. Okay? This is just it recovered on guidance, I think it was. But it's clear this one has problems. Look at the earnings gap down last time. Has it gotten better? No, they missed again. Does this one have more room to go down? Well, on the 4-hour, it looks like it's going to, turn up. Now, we're right at the 200-day on the weekly. The MACD looks like it wants to cross up. Your RSI oversold at 39. Could it go down? Absolutely. If we just look at the fundamentals on DPC, it's a buy on Wall Street. It's a buy from seeking analysts. We can look at Wall Street suggestions. 34 analysts that cover it, 17 say it's a strong buy. The average price target, 484. You're going to see this average price target come down. You're going to see that one come down pretty damn quick because that's a 19% upside from here. So with this, you're going to see it come down. Let's look at some of the valuation. The valuation, 25 PE for a freaking pizza chain. Their growth, not bad. 2% year over year revenue growth. Their levered free cash flow, 25%. Remember we talked about how the car business is a super high cost business? Pizza's not. Pizza's just not. They make a ton of money. So as long as they can continue the revenue growth and continue levered free cash flow, you should get a bounce in this stock. But is it one that I want to put money into? Probably not. Now let's talk about this. I'll leave you with this portion of education, and then we'll go into the social requests. But I'll leave you with this. This is a post. After Bill Gates became friends with Warren Buffett, he began to diversify his portfolio and sold Microsoft shares. Bill Gates' fortune today is $138 billion. If he hadn't diversified, it would be $1.33 trillion. I went into a large rant, and I don't know if it was on the podcast or if it was on YouTube Live, but I'll go into it here. Fidelity. They give me a free financial advisor. I develop a relationship with that financial advisor. I am under no restrict. I don't have to listen to him. He doesn't trade in my portfolio. I just meet with him for advice, for suggestions. He knows my portfolio. He knows my risk tolerance. He knows everything. I meet with him. He has tried to get me out of my Apple position. I don't feel like I have to get out of my Apple position. This is the key. Do not let someone talk you into a position or out of a position. I don't think Warren Buffett's told Bill Gates you have to diversify. I think Bill Gates became friends with Warren Buffett. The two of them have completely different risk profiles. Okay? Bill Gates is a fairly big risk taker. He built a business, a multi-billion-dollar business. Okay? He is very strong in that sense. Had he believed in that business, I don't think he would have diversified. But I think he saw that they were bogged down in this stuff and blah, 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 and he just got out of the business. But I don't think he ever lost sleep at night knowing that he made $138 billion. The guy can't spend enough money. I mean, when you get to that wealth, you just can't spend that kind of money. So his lifestyle doesn't change whether it's $138 billion or $1.33 trillion. But don't let anybody tell you that you need to diversify. Don't let anybody tell you and guide you on your portfolio. There's nobody who can predict the future. But Bill definitely slept at night, even with the paltry sum of $138 billion. If you can predict the future, that's great, but don't let other opinions flow make your decision. Financial advisors all advised me against stuff that I did. It's your money and it's yours. And I rather than the diversification that Buffett kind of says and buying VOO, I go to him and say, why would I buy the 30th biggest stock in my portfolio versus just adding to the number one performer in my portfolio? That's and again, it's a long-term view. I had this view on Apple. Yes, I got lucky, and I picked the right one. How do you do it today? Look to your right. What are you using? Look to your left. What product are you using? And then go do the research on the stock price, and then go do the research on the actual fundamentals of the stock. That's how you do it. So don't let anybody affect that one. That was kind of the key. Now, social requests. And if you have any questions, again, you can go to Daily Stock Pick newsletter. You can leave a comment. You can just reply to the email that you get. The newsletter is free, so I don't know why you wouldn't sign up. So, Sarah from Twitter, any thoughts on MGK? Been loading up on this in anticipation of tailwinds post-election cycle. It kind of goes into MGK. Let me see this one. It kind of goes into, let me just make a comment because Trey said, what are your predictions for the market with the election coming up? And that was from Spotify. So let me just comment. Election doesn't matter. Election doesn't matter. It doesn't matter. Take a look at 2017 after Trump won. What were we up? 40%? Take a look at 2021 after Biden won. What were we up? 30, 40%? It doesn't matter. Okay? Short term, it will matter. If there's an election kind of interference charge from Trump, because I don't think that the Democrats are going to say, hey, there's election interference. But again, if there's election interference and there's not a standard, hey, thank you for the election, you did well, I appreciate the competition, blah, 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 good luck with the country because I'm really rooting for you. If there's not that kind of stuff, there might be some downturn. You're going to have volatility. But the mega cap growth ETF, I like this one. It's basic. It's Vanguard. So I do think that it's good. They're not putting out junk ETFs, but let's take a look at the holdings. Now the quant says it's a buy. Momentum, A+. Expenses, A+. In fact, momentum, if you look at this one, MGK, over 1 year, it's outpacing the S&P 500. Over 3 years, it is most likely outpacing the S&P 500. Let's just renew this one. Why is it not doing charts? There we go. 5 years, it's outpacing the S&P 500. It just has a problem with that 3. 3 years, it's outpacing. 10 years, it's outpacing the S&P 500. So it's outpacing. Yes, it's good. So let's go look at the summary of it. We can go and look at the holdings. The top one, Apple. Second, Microsoft. Third, NVIDIA. Then you want to go and so all of these companies, Eli Lilly, Amazon, all of these companies are in the core portfolio. I love all these companies. The top, Visa is the only one that's not in the core portfolio, and it's 2%. You have 74 names. It's not bad. Expenses, 0.07. And then, if you don't like that one, you can go and look at the peers. There's FTC, which has a higher expense ratio because this one's only 0.07. This one's by far the cheapest, the mega crap. 0.07. How can you argue with that? Now, I don't know what their strategy is. I don't know exactly what it is, but they beat the S&P 500. So bulls say, despite the mega cap concentration, it seems the index methodology that incorporates forward EPS growth estimates has proven to be consistently beat the S&P 500. That's great. There's no bears. There's only one author that covers this. So I like it. It's mega cap growth ETF. This is one that I probably should have. You know what? Let me make sure this is in, I think it's in our low-cost ETF, but I want to make sure. Is it in that one? No. We're going to put that one in there. Low-cost Vanguard ETFs, because I like that one. I love it. So I don't think, again, if you don't want to buy these stocks outright, ETFs are the way to go. It distributes your exposure. Like I have XLY for Tesla. XLY, Tesla is a big component of that one. Audrey from Spotify says, is it time to invest in Boeing? Love the show, by the way. Thanks. This is what I wrote back to Audrey. I'll add it to tomorrow, but long story short, it probably is time valuation-wise. But I said that at 200. The management keeps showing us how to screw up. It's a masterclass on how to screw up a duopoly, because this and the French company are the only two that make planes. Bad management kills a stock. Is it time to get into this one? Well, I'd argue from a weekly standpoint, it's at a pretty close, multi-year support level. You got your death cross just happening, the 50 and the 200. The algorithm makes you 42%. It does make you 42% over a 19%. Okay, so is it time to get in? The algorithm has you out, and it just got you out with a loss. They've got to strike. More than likely, they've got to dilute shareholders because they need more money. And what's going to happen there? When they raise more money, the unions are going to come back to them and say, ooh, you just raised more money. You have more money to pay us. It is just a masterclass on how you screw up a stock. Now, the valuation, it's a C+. They're not making money. That's the main issue. They're not making money. Now, they're going to make money. They have a huge defense business. They have they're delivering planes still. The growth, they're not growing. They're just not growing. They're expected to grow 11%. They ain't going to grow 11% with a strike. Profitability, 10% gross profit margin. How can you run a business when the rest of your industrial, aerospace, and defense is running at 31%? Momentum's an F, revision's F. 24 have taken their earnings per share down. Only one person in the last 90 days has brought the revenue up. And I bet that was before the freaking strike. So is it time to get in? No, you can't time this. Again, if you want to trade it, I'd say the 4-hour algorithm makes you at least more than buy and hold. If you bought this 2 years ago, you're up 19.5%. Take your profits. Take your profits. I think I'm holding it like 200. It is a $200 stock. I think with the new CEO, I think it's $200 stock. So, Audrey, there you go. So, again, Trey, I answered your question. I don't think elections matter whatsoever. My predictions with the market, I think you're going to see volatility. But I think it all determines how close is the election. If there's a blowout, one side or the other, then, there's going to be some contention. Hopefully we don't have another January 6th, but it is what it is. Let's see. Trebs from Spotify, the trading desk, TDD. You can't argue with, hey, it's been great. Even from a weekly standpoint, it's been great. It's at all-time highs. That $97, it broke right through there. We haven't back-tested to support it. So I'd be a little bit concerned with the RSI at 68 and the MACD up high. When we look at the trading desk here, the trading desk, it's an F on valuation, which usually happens with these high growth. You're paying 71 times forward earnings. Now, the PEG ratio, it's 2.64. So it's not as crazy as others because they do have a kind of, when you look at their profitability, their 81% profit margin, what that tells you is they have pricing power. They have a specific niche in the advertising business. And I like this company. I've liked it for a long time. I think their valuation got crazy, but I think that their management brought it back. It's ranked 10 out of 32. I think Magnite's in here. There's a couple of other ones that might be a little bit better. But again, this one is a good one. I don't think you're going to do wrong on this one. I would just, take a look at the fundamentals. Their earnings are coming up on November 4th. The fundamentals need to support it, and they need to continue to grow. That would be my biggest issue. And I think that's where you're holding it. It does have more room to go. Wall Street, there's 35 analysts that cover this. Their price target's 111, and you're trading at 115. I think this is very similar to VRT, but it's gotten over that support level, that resistance level. So, but you have to pull back to that resistance level in order to make it support. And it just hasn't on the chart. So TDD. The other thing that he asked me is PanW or Fortinet for the long term. I don't know. I don't know. I got rid of half of my Fortinet at half my dad's Fortinet at $70. It's at like what, 77 now? It's at 80. So, I got out there. Did I buy back in at 77? No, I didn't think it was going back to 80. You have a secondary resistance here at 81. Am I buying into that one? No. If you're holding it, the MACD has kind of reset. It looks like it could go up again. Their earnings are coming up on November 7th. You got a huge gap up here on earnings. You better hope that they justify that kind of jump, because that could easily come back if for some reason there's an issue. And Fortinet, I just don't trust it. It has had huge downturns before. I've said it before that for this 2-year period, I think it's 2 years. It might be 3. Yeah, it's 3 years now. 3-year period. It's traded within this range. So is this the start of a multi-year breakout? Could be. I mean, the MACD looks good. The RSI is at 71. They have to blow it out this quarter to do it. I hold PanW. And I haven't sold PanW. And PanW is in the core portfolio. So which one do I believe in long term? PanW. I mean, me buying just says that I like PanW more than I like Fortinet. Doesn't mean that I'm right. So you're going to have to do your research and understand a little bit more into the fundamentals for that kind of stuff. Now, scans. We talked about Apple. Apple having a scan and a buy here at 228. It's down 0.58%. We're seeing a little bit of weakness in the market. We had VOO with an entry here. Now, you're seeing in the algorithm that 512 was an entry. What you're seeing here is another entry with the MACD. I've talked about it before. MACD and moving averages are what the 4-hour algorithm is based on. And that's it. It's MACD and 4-hour algorithm. This is telling you, hey, we may be going for another run, because on the scan, it got an entry. We also got an entry on QQQ. Again, the initial entry was 466. This is just telling you, hey, there might be an opportunity here for another bump up. We have confirmation over the 9-day on the Qs. And if you're thinking about Qs for the long term, I would urge you to look at QQQM. Okay, 3 Qs, M. QQQM. It's the same thing as the Qs, but it's a lower expense rate. It literally trades on the same pattern, but it's a lower expense rate. So you should make more money over the long term. Qualcomm has an entry. Is this the beginning of another bull run? I don't know. At 170, looks like it's putting in a pretty good support level there. I mean, if you bring a line down to 170, we talked about this one, 175 being support. If you bring a line down to where we're trading right at 170, if you bring that line, you're seeing, hey, that's a pretty good place to buy, because you typically get over it. Now that 175 has turned into some resistance. You can see it right there. Here, I'm going to get rid of this 170. Remove this horizontal. Look at that 170, okay? This was a high, bounced down. Then it used resistance, bounced down. Then it went through it. Then it came back down. Where'd it go? Up to 175. Where'd it go? Up to 175. Where'd it go? Up to 175. At 170, is it worth taking that risk? No. In my mind, I think you want to wait till 175. The dollar amount is not that big, but already you're down 1.8% at 167. Doesn't mean that the 4-hour algorithm's perfect. It doesn't. It wins 42% of the time. This could be one of the 58% that you actually lose. So making sure that you understand those charts is important as well. UNH, which is in the core portfolio. This one, just buy it under $600. XLV also, which is the healthcare ETF, the spider sector for healthcare, that got an entry. Now, hopefully you bought at that 580 price, because you're trading at what, 598? Just buy it under 600. Again, you're going to have some resistance at that 600 level. But I think if you're going to buy UNH before its earnings next week on October 14th, I think you're just going to buy it under $600. You're going to be, healthcare is a pretty stable business to be in, meaning that they continually raise their prices and stuff. And you can see that 450 price on a weekly provided support. So if you're going to buy here, just buy small, add to it. I don't think this is a trade. I think it's a very good little entry. We have a ton of scans, by the way. Melli, Mercado Libre is one, 2024. Okay, the algorithm makes you 89%. You make 121% if you buy and hold. This one has been a nut job. I don't want to be in this one. It's I think Brazil. It's the Amazon of South America. The MACD, super low. The RSI coming off of oversold territory. Looks like you could go for another run. Have we used that 2020 as support? Yep. We pulled back and we're on our way up. So, again, understand that it's not 100%. Like Art Vandelay says, it's not a lie if you believe it. So if I made you believe it, it's not a lie. Income ETFs, we have a bunch of them. Leveraged ETFs, we have a TQQQ. We talked about QQQ having that entry. TQQQ has an entry. The initial entry, 64, back here on September 11th, continues to do it. It has another entry today, which tells you that it could be going for another bull run. Again, it's just a guess. None of this is actual science, but you back test it. The algorithm makes you 118%. Buying and holding makes you 237%. This is one of those where logically you would want to buy and hold, but it doesn't make sense. If you look at 2022, it doesn't make sense. There's a great look up Humphrey Yang, biggest mistakes investors make. I think it's in mistake number 2. I posted a lot. If you want it again, just message me and I'll go and look for it. Low cost ETFs. We talked about QQQM, SPY, VOO, VIG, QQQ, VTI. There's a bunch of them. If you have any questions, hit me up. I've gone on for long enough. It's an hour-long show. We went into a deep dive of Tesla. If you have any questions, again, hit me up. I'm available for whatever. I may go live. By the way, if you made it this far, I may go live tonight. It's at 10 p.m. is the event with Tesla. I may go live on Substack. So if you have the app for Substack, and again, you can download it, I may go live. It's just a talking head. If I'm awake and I think about it, I may go live. If you have the app and you're subscribed to my newsletter, you'll get an alert within the app. That's what I'm told. I had a meeting with them and they said, hey, will you go live? The problem is I'd like to go live like you can see it here with charts and things. But A, the market's not open. B, it's only mobile right now. You can't do live on a desktop or a computer. And so it's just the vertical screen. So I couldn't set it up so that the stock chart was there. But I may go live with something. We'll see what happens. But again, if you have the thing, you can get it. Okay. Take care. Good luck. And I'll be back tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.